Here we go. Once again, today's Monday, February 10th. This is Dan Bird with the daily scan from breakpointtrading.net. And the stock market yo-yo continues this week. Down Friday, up today. Let's see what's going on. I am not a financial advisor, of course, as I mention every day. This is for educational purposes only. You have to understand your own trading style, make your own decisions. Anything that I say is not meant as a recommendation to buy or sell anything. Nobody knows what the market's going to do, including me. So take your own responsibility. So let's take a look at where we are. This is going to be a quick one today because I've got some other things going on, so I'm not going to have too much time. But let's take a look first at what the market looks like. The market bias ticked down slightly, not much, but a little bit. Didn't go up. That's probably the bigger news. You can see there's a mixture of reds and greens in the market bias today. That's why it kind of went sideways. And the short term and the medium term are both right together right now. So they're not really moving much. So the whole market is just sort of hanging out, waiting for something to happen. And that something might be CPI that comes on Wednesday. So keep that in mind. Be very careful of that. The market actually had a nice day today. We look at the S&P. It was up slightly, but it's still below the resistance line, 6,100. That's the key. 6,100 to the upside, 5,850 to the downside. This is going sideways right now. And just to highlight that, I'll show you first. Let's take a look at that chart. So here's the S&P. This is current as of today. And you can see this is how market cycles usually work. Accumulation phase, a markup phase, a distribution phase, and then a markdown phase. And it looks to me like we may be in that distribution phase. Now, we don't really know that until it breaks below the support line, which is at 5,850. So we'll have to keep an eye on it. Right now, it is continuing to go sideways, had a nice little update today, but actually did not even get back to the open from Friday or the close from Thursday. So even though it seemed like a nice day, it actually is just going sideways still. To look at, from Stock Trader's Almanac, to look at what February typically does, you can see that we are right now right here. And that's on the 10th. And here's CPI coming up on the 12th, Wednesday. Then we have a day off on Monday. And then after options expiration next Friday. So typically the market kind of goes sideways, choppiness in February until the end. The last part of February usually is slightly bearish. So we need to keep that in mind as well. That could start with the CPI report. I think right now the forecast is for it to stay at 2.9% annually. I think that probably will be accurate, although it potentially could even tick up to 3. If it ticks up to 3, the market will not like that, and the yo-yo will continue. So, well, this is a really important one, the CPI that comes up on Wednesday. So keep an eye on that. So let's go back here and take a look again at, that was the S&P. We'll look at Bitcoin today, see what it did. Bitcoin just kind of going sideways. It's below its moving average lines. So it's just hanging in there. Look at that, 1, 2, 3, 4 days in a row with a spinning top doji. Really indecision with Bitcoin right now. Doesn't really know which way. And even today, even though it had a bigger candle, it still is a spinning top because it had an equal wick on the top and the bottom. I did a whole session on candles. If you want to look at that, it's in the playlist for Technical Tuesdays. Technical Tuesday I'll do tomorrow. I haven't decided yet what the topic will be. I did have a suggestion from a subscriber that on Fridays I should do a strictly weekly charts, and we'll just look at the weeklies. We'll do a scan of weekly stocks to find potential breakouts on a weekly basis. That's a much longer term. So that's for people that like to trade on a much longer term basis, even up to a year or more. But I think that was a good idea. And the weeklies usually complete by the end of Friday. So after the close will be a really good time to do that. So that's what we're going to do starting this Friday. Tomorrow, I'm not sure what the topic will be. But Bitcoin right now, just kind of going sideways. Gold, let's look at gold. Gold, I think, had some movement, continues to go higher. You can see right there, continuing to go up, just almost a straight line, straight up. So it looks like a lot of people are moving to safety with gold. The only, I'll take a look at the dashboard. The only sector that was positive, but it's an important one, is technology today. So here's equities. You can see everything's green. The VIX ticked down slightly. So there's the Dow, the S&P up, the Nasdaq up, Nasdaq 100 up, S&P 100 up as well. So everything's up. Small caps actually kind of went sideways, went down at the open, but came back, but it's finished right at the open. And mid caps the same thing, finished right at the open. Bonds, the 20-year went down for the day. Dollar went up for the day, and the 10-year ticked higher a little bit. So, but it's really just going sideways. Commodities is the one that I'm worried about, actually. So commodities is going higher still. Oil is going higher. Gasoline definitely is going higher. There's gasoline. These are the things that I think are potentially could push that CPI number up to 3 on Wednesday. And that will not be good if that happens. And then crypto, of course, Ethereum was up today as well. Right there, up a little bit. Bitcoin up a little bit, but just kind of going sideways. If we look down here at the sectors, energy was the top sector. Technology was the second out of the top 10. At the bottom was financials, real estate, and healthcare. So it was a mixture of defensive and aggressive sectors. Utilities is the most defensive, and it's in third place up here. So technology, though, that's the one that carried the day today primarily. So steel did pretty well. It was interesting that steel did well, even though there was an announcement of tariffs on steel. So, but it actually did still do well today. And then gold mining. So all of these are in the materials space. And then staples, energy, technology, energy, discretionary, and materials. So materials actually made a pretty good appearance today. It's one of the smaller sectors, though. So we'll take a look at all of those in a second. Over here, this one here, Gorilla Technology, has really been making a move. You can see right there, it's going up nicely. So that's a software company. It looks like something's happening with that company for those that want to do the research on it. Burna Technology also doing well today. Here's Gene DX, which was up 2,600% last year, had a big, huge sell-off. So maybe it's bouncing back today. This one here also. Cerence had a huge day about a month ago and then pull back. It looks like it's starting to make a move. And RDW, which we had on the list a while ago, that's making a move as well. That might get re-added. Lunar, I actually got into Lunar today. It looked interesting. So it's just starting to make a move, just went above its 21-day moving average. And if we look at the ones at the end, we've got, let's see, here's a semiconductor company, definitely going down. This one here, I think, is semis going down. Not sure about that one. And what else? Anything else interesting here? Nothing there. Fubo, just going sideways. So Tesla's kind of at the bottom, continuing to go down. United Airlines had a great run. Now it's going sideways. So we'll have to keep an eye on those. So next, I want to take a look at something that a subscriber on Saturday pointed out to me that I hadn't looked at this chart for a while. But a lot of these charts over here, you can, just go through each of them, just know what they do. And you can always go back and find it if you need to. But the one he pointed out was this one here, Fed rates, 30-year mortgage, and the 10-year yield. And I actually extended it back even further. So the vertical blue line right there is the beginning of recessions. And the green line is the Fed rate. So notice what the Fed rate does. And I pointed this out before. It's one of the criteria for the recession watch. One of them is recessions usually happen about 6 to 9 months after the Fed cuts for the first time. So they cut for the first time in September. So that puts it probably somewhere early Q2. But look also the 2-year yield when it starts going down. recessions start. The 30-year mortgage, it's down here. When it goes down, recessions begin. And then the 10-year in particular, when it goes down about 6 months later. In this case, probably about a year later. Actually, this has been going down for quite a while. So this is 2019 to 2020. So that's the pandemic, but even on all these, this goes all the way back to 1990. So it looks very similar in all of these cases, and look where it is right now. So if it follows the same trend as it had before, then this appears to me to be maybe 3 to 6 months away from a recession. We'll see, but that was a very interesting chart, very interesting thing that he pointed out. All of these are right here on the website for those that want to look at them. If we look at the 10-minute chart, you can see here's what the S&P did, went up in the beginning and just went sideways. So all of the gains are right at the open, just going sideways. But look at the one, technology, the number one sector. It opened way up here, stayed up there. This is the largest sector in the S&P. So that's the one that carried the day today. Financials was down, discretionary was flat, communication was flat, industrials was flat. If we look at the defensive ones, I want to see materials. Materials was actually flat, even though they had a lot of them in the top 10. But you can see this is the smallest sector in the S&P. It's less than 2%. Utility started to make a move at the end of the day as energy was doing pretty well today as well. And staples started to pick up. So these are all defensive sectors, and they're just starting to pick up. So are they anticipating something that might happen on Wednesday with that CPI? I don't know. We'll see. We'll see what happens tomorrow. If the market can hold these gains, you can see here's today's open, and here's last Monday's open. So we opened higher than a week ago. If it can maintain that level or even continue to climb, that would be very positive. But we'll see what happens. Wednesday is going to be a really important day. So keep an eye on that. All right. I want to look at the VIX real quick just to see what that's doing. The VIX went down actually. So if you notice here, this is what's happened the last 3 weeks. So very volatile. We had 3 weeks in a row, just down and then back up again. So here's the S&P at the bottom, and here's the VIX at the top. So when the S&P goes up, the VIX goes down, and vice versa. And we had big gap downs 2 weeks in a row. So right now we're kind of pretty much where the historical last 3 weeks have been. It's below 17, which is positive, but I'm just concerned that we're going to start to do this again. So we'll see. The S&P again has not got back up here to the highs. 6125 roughly is where the high was. 6100 to me is really the resistance line. That's where it needs to get to. And today it ended at this is the VIX chart that I'm looking at. The put call ratio went way below 0.52, and when it gets down there, that's usually where we get tops. So that's usually where the market tops out. So it's pretty close to where the top was right up here. But then it started moving up, which means there are more puts being purchased, means more people are becoming more negative. When it gets down here, that means everybody is bullish. And usually that's where the market turns because there's nobody left to buy because everybody's bought. The 10-year is just hanging in there going sideways. So it's behaving itself so far. So, I mean, there's no real red lights right now, no warning signs yet, other than we can't get out of that sideways channel that we've been in. So we have to be careful about that. And then I want to look at the materials sector. You can see these are the ones that were the top 10 and bottom 10 last week. And you can see in materials, mining, non-ferrous metals, and gold, all in the top 10. So here's materials trying to make a comeback. It's in a sideways channel, so it's consolidating right now. Consolidation theory says that if it's down here at 83, consolidating at 89, that's about 6 points. So 95 is the target or the measured move, which makes sense because that's about where resistance would be. So that's where it potentially could go to if it breaks out of that little channel right there. We can look at gold mining since it was one of the best ones for the week. And you can see gold, just like gold mining is just heading straight up as well. So that all looked great. The ones that did the worst was discretionary last week, and then the rest were mixed. There wasn't anything in real estate or energy last week, but energy is starting to make a move today, I noticed. So it looks like it's starting to head higher. So that looks like an area where there might be some potential there. And most of these, I mean, they all look very similar. They're just starting. They really haven't broken out necessarily, but it looks like they're starting perhaps to make a move. So if you want to look for some stocks in the energy space, you can check them out there. These are the top 10 lists from last week. You can see Lunar is on it. It's actually green, which means it's in all three of the top 10s. One of the reasons that I bought it, other than the fact that it started to come back after pulling back, so it went above the 21-day. And in fact, we'll take a look at the chart right here on the website, so you can see it right there. So there's the pullback. It had been doing well, higher highs, higher lows, pullback, comes up back up to the 21-day, and the momentum is starting to cross over. So that's where I like to buy. I like to buy close to the 21, especially close to the 21 and the 50, because it has much lower risk. I can put stops in a little bit below that just in case it reverses and doesn't continue to go up. But I'll keep an eye on it. But that's the other reason, is because it was in the top 10, three of the top 10s. The other one, of course, is Palantir. Now, Palantir dropped out of the middle one, and Lunar dropped out of the IBD 50 last week, but they're still in all three, so they all get greens. Rocket Lab is another one that looks interesting right now as well, and it's at the top of two of the lists, and it's just starting to take off. So I'm just kind of giving you a preview of some of the daily scans that these have appeared on. This one needs to break out right up here, and in fact, I didn't have this set up, but I'm going to do it anyway. I'm going to go in here and go to the dashboard and go to my ACP charts. And I just want to take a look at what the squeeze looks like on these. So we'll take a look at it here. And we'll look at Lunar, UNR. Lunar does not have a squeeze, and the momentum is starting to roll over. So that you have to really keep an eye on that. So the stop is right down here at the 50-day. If it goes below that, then all bets are off on that one. So that's Lunar. And the other one was Rocket Lab. Rocket Lab does not have a squeeze either, but it's just starting to pull higher right now. In fact, it did have a squeeze back here, and it wouldn't surprise me if it stays in this range right here. Actually, above 31 is really probably where it's going to break out and start to go higher again. So the MACD up here certainly is starting to cross over. So that one looked pretty good. And then the one that we did put on the list last week, which is Zeta. Zeta actually started to have a good day and it pulled back. It actually has a reversing candle right now. So that's not a good look. It was in a squeeze. It broke out. It actually fired the squeeze to the upside, sitting right on the 200-day moving average. So it is testing itself right now, testing that breakout. So we'll have to see if that ends up being a failed breakout or not. But it could get back up here to 32 area. Right now it's sitting at 22, so $10 from there. But that candle today does not look good, so we'll keep an eye on it, see how it does. All right, I think that's it for today. Let me know if there's anything you would like for me to talk about or cover. I know it's a short one today. I've got some things I got to get to, but I appreciate everybody watching. Please subscribe and like the video. And if you're interested in getting to some of these charts and a lot of other things that are on here, like the portfolios, which I have a long-term strategy right here. It actually went bullish again today. So it still has not turned yet all the way back to November 3rd of 2023. So it's up 42% since then. So this is something that will help for those that like to be in things for the long term. That's about a year and a half, 42%. And if you use the 2X or the 3X ETFs, then you'd be up 126%. So this is something that I just keep track of. I update this every day. So That's interesting, and it's still very positive, still bullish for the overall market. All right, thanks for watching breakpointtrading.net. If you would like to get the newsletter, the free newsletter is right in this little box right here. If you would like to subscribe to it and be alerted when it comes out, you can sign up for the $0. Doesn't ask for a credit card. We don't sell or share emails. Or you can get all of those charts for just $99 a year, which really is a bargain. All right, thanks everyone for watching. That's it for now. Tomorrow's Technical Tuesday. I'm not sure what I'm going to cover, but I'll figure that out and we'll go through it tomorrow. Thanks, everyone.